Welcome to FinanceFeeds podcasts. FinanceFeeds is the world's premier interactive Forex industry news source, providing the latest insights and current affairs from within the online trading industry worldwide. Enjoy our latest podcast episode. This episode is sponsored by Axi Select. Think you have what it takes to be a successful trader? Visit www.axi.com/int/funded-trader-program and get more information on how to join the Funded Trader Program. Hi, everyone. Welcome back to Finance Feeds podcasts. My name is Nikolai Isayev, Editor-in-Chief of Finance Feeds. Joining me today is Greg Rubin, who's head of Axi Select. Greg, welcome to our podcast. It's great to speak with you again.
Thank you, Nikolai. Great to be here and to speak to you again.
Awesome. Greg, let's jump right in. In light of recent events, it seems the prop space is rapidly changing. What do you anticipate for the future of the prop industry going forward?
It's a good question. There's a lot of unknowns, and as you mentioned, it's a very fast-moving industry. There's a lot of change and a lot of things that are happening at the moment. So I think let's try and unpack on what we do know. And what we do know is that meta quotes seem to be pulling back from the space. Meta quotes are pretty much the face of the prop industry as well as the face of the retail broking. We've also know that certain brokers, the mainstay brokers in the space, have been or showing signs of leaving. So we're left with a situation with many prop firms looking for new brokers, looking for new platform providers. And there are many questions that we left with. Are traders going to follow these firms to different interfaces, to different platform providers? Is there even an appetite for some of these other brokers or platform providers to enter the space? Are they going to be potentially shut down or potentially subject to regulatory issues if they do enter the space, such as what we've seen sort of transpire over the last few months? So I think there are a lot of questions or more questions than answers at this point regarding what it would look like. But I think what's often overlooked in this instance is the actual model. In my opinion, it's something I've been very vocal about on many different platforms, is there is a flaw in the actual demo model charge a registration fee. We've seen just significant number of firms that have all set up basically offering the same thing. And the way that these firms profit is by claiming client registration fees. Most of them are not financial firms. To be a financial firm, you do KYCs, your AMLs. Most of these firms wouldn't be doing such things. They're more marketing products and sort of into the space. So I don't believe it's sustainable, if I'm being perfectly honest, the current model that we are seeing. So I think we'll see changes, and I think we are already seeing those changes. We're also seeing brokers into the space. So, something like us, Axi Select, when we set up, we offer a model that is more, in my opinion, more user-friendly, or is more likelihood for traders from a profitability perspective, from a trading perspective, as opposed to speculative perspective. So I wouldn't be surprised to see, gun to my head, how do I see this developing? I don't think you'll see as many firms that we have in the future. I think you'll see more brokers in the space, and I think you'll see models that are more conducive to clients generating profit as opposed to speculative.
Well, I think you raised a lot of very important points, and some of these I discussed with one of my previous guests, in that, in my mind, some of these troubles, I'll call them troubles in a sense, that have happened or transpired recently. You mentioned some of them related to meta quotes, but then there's also this idea of U.S. traders, right? People who are interested in trading in the United States and how they all fit into this rapidly changing part of the industry, and kind of, the fact that the U.S. is a highly regulated market. The U.S. authorities typically take a lot of initiative to protect U.S. consumers. I'll call them consumers, right? That are, let's say, interested in trading different markets. And one of the things that we discussed with my other guest was, are the U.S. authorities going to do something about this? Because sooner or later, it's going to land on their radar. And also, ultimately, the U.S. is the country that usually enacts regulation, and then the rest of the world follows, right? So we're in an interesting situation where U.S. traders somehow got involved in all of this as well. And I agree with you that on the technological side, there's changes taking place as well. But it seems like perhaps the regulators, like you rightly said, might start taking notice sooner or later. And what does that really mean for firms that have been set up as native prop shops, if I could call them that, right? Not associated with any particular regulated brokerage. Is there anything else, in your opinion, that you think kind of led us to reach this point where we're at today? Is it sort of also an oversaturation of the market? Because it seems like several years ago, prop firms were kind of few and far between, and now they're all over the place.
Yeah, you raise very good points there. And I think let's start with the US traders side of it, or the US regulators. And what we have seen from the US regulators is that they have actually got involved and sort of started this process, so to say. What we have seen with MetaQuotes pulling back, a lot of it, we believe, has to do with the fact that US clients were being onboarded. And if you look at the structure of what we have in place, we have the prop firms, the tech providers, the brokers, and you have then MetaQuotes. And what happens is you've got something called gray labeling, that these brokers are basically giving their MetaQuote license to the prop firms. So the prop firms are onboarding clients. They're using the broker's MetaQuote license. MetaQuote has no visibility of these brokers of the clients who are being onboarded. And as you and I know, that CFDs are banned in the US. So all of a sudden, through this process or the structure, you've seen the ability for US clients to get access to CFDs, which of course is going to be something that the regulators are going to clamp down on, because it's an avenue for illegal activity. Now, to answer the bigger question, how did we reach this point, or what have we reached for regulators to take action? And the big thing for me, or the big change, is, as you mentioned at the beginning, there were 4 or 5 firms, maybe a few more, who were doing this. It was quite a niche market. And then all of a sudden, you had hundreds of firms in the space. And now, how did that happen? The main answer is the big rise in the tech providers. So you had tech providers who entered the space, who basically white labeled their solution, which allowed the barriers to entry incredibly easy. So what they do is they set you up with brokers. They handle all the admin. They let you choose how you want it to look like. So all of a sudden, all you had to do was to pay a fee, and you could then go market this product, and you didn't have to do anything else. Everything else was looked after for you. And naturally, there was these few firms were reportedly making a lot of money, and so it became more appealing. And what you saw was a huge amount of firms into the space. Most have no financial knowledge. Most have no understanding for risk management or how markets actually work. You're trading a demo account. You're paying a registration fee. It is not considered a financial product. So you can see why, with regards to a lot of these firms, is they don't understand how the whole market works. Now, I'm not referring to every firm, but naturally, you had a market with a few firms to now a market of thousands of firms that have entered the space. The offering to the uninformed is pretty attractive. Get huge sums of money for a few days of trading, and it's promoted as a very easy thing to do. So you could see why it became appealing, and why it's unlikely to be, a short-term issue. As you can see why the industry is likely to change off the back of this.
Mm-hmm. Yeah, I think that's a great point. And in thinking of the recent opinions, gamification of trading, I'm sure that's something that you've heard of or are familiar with. And now there's this talk or these warnings about influencers, using influencers for marketing whatever trading services you're trying to promote. And then also, when we talk about gamification, I'm not a gamer myself, but I've played a handful of video games, let's say on my cell phone before, just out of maybe sheer boredom or something. But it always seems to me that the game is free in the beginning. You download it, you start playing it. It's kind of fun, I guess, whatever. It consumes your time. And then at a certain point, the game says, okay, well, either you lost or, whatever. You have to reset the game. In order to reset it, you have to start paying for it, right? You have to buy tokens or something like that.
Yeah.
And then it's like, okay, well, now this is a sort of like a commercial enterprise that I have to be involved. I have to give you my money to do this. And when thinking about prop trading firms, and like you rightly said, there's a lot of these fly-by-night companies. It's like, hey, yeah, go ahead, come in. You can start trading. It's not real money. It's a demo account, but there's all of these different incentives, at least that they're presented to you up front on the website and in the materials, And it all seems quite interesting and quite appealing, I think, for people who are interested in trading, and especially for those people that probably don't have any experience in trading whatsoever previously, right? They're coming into this because they're seeing some sort of ability to trade without any risk at some point, and if they prove themselves and if they're successful, then there's an opportunity to make some money. But you do, in most cases, like you said, you have to shell out some money in the beginning to even join one of these programs. So
There's a very good point. It plays on the biggest issue that we have in the trading space with retail clients is the lack of funding. It's why you see traders using way too much leverage generally and ultimately blowing up accounts. So it's quite appealing to say, well, I can put few $100 in and I can get a 200 grand account and I can get it within 10 days. And, naturally you can see the odds of the likelihood, simple Google will tell you the percentage of traders who actually get access to the funding and the percentage of trading who can keep that funding, because you're not ready. Nobody after 2 weeks of trading is ready to be handing 200 grand books. And once you do get that, some get it quite quickly and ultimately you lose it, you want to get that again. And so you go in the circle of paying for registration fees and ultimately into the current system and model that we've seen.
yeah, absolutely. I agree. And, you mentioned, it started out as a handful of firms and now there's hundreds or thousands of them. And that's true. One of my industry colleagues recently found, oh, this was a while ago, but they found like at least 60 prop firms just in the United States alone. And this was actually last year. This is before all of these sort of issues started coming to light. So if there's at least 60 firms that are publicly available or you could find online in the US, imagine how many there are across the entire world. But I sort of digress. What I wanted to say is there's a few sort of niche firms that have actually been around for a number of years. And in speaking with them, a lot of the people that are involved in these firms or run these firms, they all come from the brokerage industry themselves.
Yeah.
They're like people like us. So they kind of understand what's going on in the brokerage space, and they understand that they might not be liable for some sort of KYC or other processes that are required of other firms. But when it comes to things like education, they've been telling me, that's something that we sort of rolled out right in the very beginning, because we understood that we're not a fly by the night type of firm. We want to provide traders with education firsthand. So sure, if you want to sign up, you can sign up. Sure, you want to start trading on a demo account, that's fine. But you really are pushed to an education program at the same time to really kind of get you to understand all the intricacies of trading. I think there's a few firms that are, dare I say, are doing it right, even though I don't think there's a right and a wrong way of doing things yet. We haven't established that yet. We haven't gone through that Rubicon yet, where these thousands of firms turn into and consolidate into something a lot more manageable, sound, and succinct for traders worldwide.
Yeah, I mean, I don't think there's a right or wrong per se. It's not for us to decide what's right or wrong. But what does interest me, or I guess maybe interest isn't the right word, but what confuses me is how so many firms have set up offering pretty much the exact same thing, the exact same model, maybe changing one or two things, and then goes and markets it as such. I mean, the persons who created these models, I'm sure it's very easy to copy, and we've seen that. You can definitely see the resemblance from some of the original firms to some of the models that you're seeing now. So it is crazy how so many firms can offer the same thing and how there's such a marketplace for it.
Yeah, and listen, I always look back at the retail brokerage space
Yes.
15, 20 years ago. Same thing happened. A couple of firms showed up offering online Forex trading, and then you go from a couple of firms to 10 to 50 to hundreds of brokers around the world, regulated, unregulated, and then period of consolidation, regulatory
And I guess offering
hardening
similar
of.
things as well, right? Offering some,
And exactly.
yeah,
I mean, if
yeah,
you think about it, the
you're
trading
right.
technology, we mentioned meta quotes, right? I mean, it was the standard for many, many years because it was super easy to use, and the traders knew how to use it. They were familiar with the platform, so
Yes.
it was kind of like it was super easy, and you could open a brokerage at some point. You could open a retail forex brokerage quite quickly somewhere offshore and get your KYC and your your documents and your capital requirements in a row and then go get a license, and then everything else is marketing and CRM systems and things like that, which are
You're right.
totally abundant. So I'm right now I'm sort of waiting in anticipation to see kind of what happens and if this will mirror the evolution. I would say it's the evolution of this part of the industry. This episode is brought to you by Axi Select. Think you have what it takes to trade your way to the top? Join Axi Select and trade your edge. Visit www.axi.com/int/funded-trader-program. I wanted to sort of move on to speak specifically about Axi Select
Sure.
because the offering has been up and running for over 6 months now. And Greg, you've mentioned the ways that a lot of prop firms operate today and some of the issues that we've seen. But how is Axi Select different from the rest of these programs? And how confident are you that Axi Select will not experience the same fate of firms that we've just discussed and some of the things that are actually happening?
So Axi Select is completely different to what else is out there in the marketplace. And the first major difference, the big major difference, I guess, is we do not charge a registration fee. Axi Select is 100% free for clients to join. We don't have a registration fee and we don't have an evaluation stage. What we do have, however, or we do require is for traders to put their own funds into their Axi Select account, which are the traders' funds. They can withdraw them at any time, but they can also, of course, lose their funds. It is their funds in a trading account. And we set up a trading account to trade alongside it with our funds in with a certain multiplier, which ultimately, depending on the funds that the trader starts with, can decide on what ratio they want our funds to be copied at. So ultimately, the model is different. So we don't have that registration fee evaluation part to the model. Another big difference is we use real life accounts. There are no demo accounts at all in the Axi Select program. All clients get the exact same trading experience as our existing Axi clients get. In fact, they even get the option to choose if they want to use our pro accounts or our standard account. So you get to choose your live account, and we do not use any demos at all. Something that's often overlooked is the program structure. It's all very well saying how much funding are you going to give me and what percentage are you going to keep, but we take pride in the actual looking at our program structure, that it's a bit more long term, it's a bit more holistic. I will always say that trading is difficult. It is not easy. Don't expect to get $1 million of our funds, as opposed to trade for 2 weeks, have the potential of getting 200,000, 500,000, manage money really quickly. We go the opposite route. But what we do is we provide the tools that one needs. So yes, trading is not easy, but what we do is we have an all-inclusive side to the Axi Select program. We're not saying here's just funding golf by yourself. We basically give you a dashboard, a leaderboard, an edge score, an exclusive trading room where you can learn from traders. I don't like the phrase built by traders for traders, a bit cliched, but Axi Select generally was created with best interests of traders in mind. We know that trading, again, is not easy, that you're going to go through bad periods. So instead of sending you a hard breach email at your first bad week or bad month, we offer 3 attempts on the program. So you get 3 attempts on the program before you drop out, and you can then start again. So that is a big difference. And then just with regards to the actual conditions, we do pride ourselves by giving traders a more realistic, a fair opportunity to forge careers. And what I mean by that is we say you need to make 5% at each stage, where you get 10% where your stop is. So 2-to-1 in the trader's favor. We don't have any rules of what you can trade, sort of holding on weekends, trading on market news announcements. We give them a platform which is conducive to generating profits. But you did ask me, are we potentially going to be subject to the similar issues that other firms are facing? And I think it's important to say I don't see it like that. Well, I'll say a confident no, and I'll tell you why. We don't take US clients on board at all, so that's obviously one of the reasons. But also, as a business, we're an established broker that is well intertwined with MetaQuotes, and we know their rules and regulations, and we abide by them. We operate like a broker. Axi Select is real life accounts. It's not demo accounts. We're not charging a registration fee. So we don't have demos, we don't have registration fees, and we don't take on US clients.
I was going to ask, with all these things that you just mentioned and all the features of the service, was Axi Select intentionally set up as an alternative to all of these prop firms? because it sounds like a smart option for traders who want to kind of be more empowered in what they're trying to do. Because like you said, Axi Select is not about trading in a demo environment for a short period of time or a long period of time. It's quite serious in the sense that you are investing your own funds. There are multipliers and all of these other settings, but you're really being set up to really start trading for real, if I could say it like that,
Yes,
right? Like
yes.
you're really set up to be trading for real. I guess the other question is how confident should traders feel about joining Oxy, considering that there's no demo environment and they do have to deposit some of their own money to begin and to enter the program.
Yeah, so I won't say Axi Select was set up as an alternative per se, but when we were setting this up, we were well aware of the models that were being offered, and we wanted to use our size as an established broker to offer a product which is more holistic, a product which is more focused on trading as opposed to speculation, and one that generally gives traders a fair opportunity to forge careers and generate profits. So again, I don't believe that the current model is conducive to trading. Sure, it's got very certain merits, and sure it does have a certain market, and it's more speculation. But we wanted to use the broker side, our size as a broker, to create a program that gives traders that holistic opportunity that covers the issue with lack of funding, that addresses, should I say, the issue with lack of funding, but gives a comprehensive sort of full program offering. And I think that's what we've done with Axi Select. We don't charge registration fees. It's live accounts. We use ourselves as a broker. We don't need a third party as a broker. So it certainly, I won't say it was set up as an alternative, but it was set up knowing what we believed there were flaws in the marketplace, or where we could find a place where we could actually give traders something that wasn't there. How confident? Well, very confident, I would say, because Axi is a broker. It's been around for over 16 years, licensed in multiple jurisdictions, whilst we offer Axi Select to SVG clients currently. So from an Axi broker perspective, we established broker, we've got a reputation. We're not a firm that's just set up to offer this product that could potentially disappear. We have a reputation to uphold. With regard to the Axi Select program, again, it doesn't cost, there's no registration fee to join. I like to split it up between two. We've established on why I'm confident, or where I see the big advantages from this model versus other prop models and what we've seen. But what about from other clients trading at other brokers? And what I mean by that is, if you're trading $500 or $1,000 at a competitor broker, you might get good execution, you might get, I don't know, good trading conditions, you might like the interface, whatever it may be. But what we're saying with Axi Select is it's also changing the broker space. Is we're saying, well, take your $1,000 to us and immediately get $5,000 of our funds. Go to the next level, get $20,000 of our funds. Then get $100,000, get up to $1 million, basically doing the same thing. Your funds are at risk when you're trading at a broker, like they are if you join Axi. But once you're on Axi Select, you immediately get another account with our funding, plus important tools that we've established that traders need in their journeys. So the additional tools that assist traders, which are very, very important to Axi Select, but even just from a funding perspective, we're giving you funding. So I think Axi Select, again, coming from the broker space, being a model built by brokers, it covers both markets, and what's beneficial for traders of both markets. You might totally dislike or be unhappy or think the prop space is not real, which again, there's a lot of opinions like that because of the registration fees and etc. But you could basically ignore that, just set up your Axi Select account, trade normally, and come the end of the month, if you've made profit, you're going to get profits from us and your own profits. So even that, I believe it covers in that space, or it's appealing, should I say, for traders who are trading at brokers as well.
Mm-hmm. Yeah, I think you made a really important point. It's like, listen, if you're trading somewhere with, like you said, not a lot of capital, and you're just doing it because you want to day trade or you want to carry trade, because carry trades are back for now, right?
Yeah.
And you want to speculate in the market. If you show signs of success, we'll fund you. We'll give you our own money. And again, if you continue to be successful, you're going to make money on your own account and a separate Axie account based on the rules of the program.
There's one point I want to raise as well with regards to the space. There's often, you see a lot of complaints with clients not getting paid or payment withheld with regards to performance fees that earned, and sort of an argument over that. With Axi Select, it's all automated and it's all instant. At the end of the month, any funds that are owed to you from your allocation account is immediately transferred to your Axi Select account. So it's the first of the month. Whatever's owed to you is immediately sent to your account. There's no obstacles. It's automatic, instant payout that go to your Axi Select account.
Well, I mean, that's another important point. If you're trading with a company that has a long history of being a brokerage and is just plainly honest and engaged in best business practices, you're not going to run into situations where another firm may be, oh, well, actually, here you didn't do this, or actually, or we had a glitch in the system and sorry, it's all gone.
You're right.
um, it's all
Exactly
gone or
that.
something like that. Yeah, that's a great point. So I wanted to ask about some of the other details of the program with respect to how much funding can traders access and what the profit share is. And then also, you mentioned a scoring system or score profile that every trader that joins Axi Select has. Can you talk a little bit more about those features?
Yeah, sure. So let's start with the actual details of the program. So Axi Select consists of 6 stages. At every stage, we offer a different amount of funding and a different amount of profit share that you'll keep. Without going into too much detail, but at the top end of the program, we offer $1 million, and the trader can keep up to 90% of the profits. And at the first stage, we offer $5,000, where clients get access to the trading room and the dashboard. There isn't a profit share at this first stage. Then the second stage, up to 20,000, can keep 40%. 100,000 at the third stage, keep 50%. Then 200,000, 70%. $500,000, 80%, and $1 million, as we said at the top end, to keep 90%. And to progress, there's also, as you say, the scoring system. And what we've done is we've created a score in-house. It's called an edge score, which works twofold. One, it works to assist the traders on how they can improve. So it covers components such as risk, skill, consistency, and experience. And it gives you a score for each of the subcomponents. So you can see which area of trading you need to improve on and what areas you are doing well in. So it's used to assist the trader, but it's also used for us to govern you through the program. Again, we're giving you $1 million of our funds. We need to make sure that you can manage $1 million. It's the same thing at all stages. So we use the scoring to judge traders' ability and basically to decide from our side how comfortable we are with giving you X amount of funds. Like I said, we encourage good trading, not speculation. So we need to see some experience. You're not going to get a score of 95 and be able to get $1 million in 2 weeks. That's just not the way trading should work. So it's used to assist us in governing the program, but it's also used to assist the trader in improving their trading.
And I wanted to ask, are there any restrictions in the trading conditions themselves in terms of the abundance of instruments that they can trade on and good traders who want to enter this program, right? I mean, there's no difference whatsoever. It's the same amount of CFDs, FX, and other financial products that Axi traditionally offers.
Yeah, so we do have a very wide product offering, again, being a broker. There are certain instruments that we don't allow to get copied to the allocation account that traded by traders can trade every product in their Axi Select account, but we show certain symbols which are excluded. Naturally, some of the smaller altcoins in the crypto space. We do offer Bitcoin and Ethereum, certain stocks which don't copy, but traders can trade all of them. I think you raise a good point about the restrictions. It's something we pride ourselves on, is the fact that we have very unrestricted trading conditions. And what I mean by that is the only real restriction is you can't lose 10% of your allocation account. If you lose 10% of your allocation account, you get dropped back a level, or you go to quarantine, you get your 3 attempts. But even then, we say make 5% versus lose 10%. It's still very favorable conditions. We have no rules or restrictions such as trading on weekends, such as holding over news announcements. We don't penalize traders for high watermark levels for their success, and we don't have trading stop losses. We don't have a minimum that you can lose in a day. We basically don't want to encompass or encourage have all these conditions that make it really difficult for traders to generate profits. It's all very well me saying here's $1 million and here keep 90%, but if I make your trading conditions really difficult, well, that's not going to give you a fair opportunity, is it? So it's very important that our program gives traders the flexibility or the breathing room to be able to improve, express themselves, and actually give them a realistic platform. So we very much take pride in the fact that our trading conditions, as you say, are the same real life trading conditions our clients get without restrictions of what they can or what they can't do whilst trading.
Mm-hmm.
There's no time limits either in terms of maximum time limits. There are minimum time limits, but naturally, because we want to see over time, over a certain amount of trades, that you can handle more and more money. But we don't put restrictions on you must achieve this amount in a certain amount of time. Absolutely not. We don't want to put pressure on traders or make them make decisions based on the fact that time's running out.
Mhm. Yeah, I think that's also a great point as well. And when you mentioned 5% on the upside, 10% on the downside, that kind of like reminds me of my old retail forex days. And how does a trader develop a good risk management strategy, right? How do you not get greedy? How much floating losses can you incur, for example, right? And all of these different things that you need to know, like margin requirements and stop out levels and all of this stuff. But again, if we think about trader psychology for a second, obviously I would probably want it to be the reverse. I want to make 10% on the upside and I'm willing to only take a 5% hit. You know what I mean?
It's very rare you see make 5% versus lose 10%. Again, a big plus point for Axi Select.
Greg, I wanted to wrap up our discussion. I wanted to thank you for talking about some of these latest developments that we've seen and heard about in the prop trading space. And it was actually great to connect with you again and get a refresher sort of on the Axi Select program, how it's different from a lot of the things being offered in the industry today. And I hope to catch up with you in the future and see how things progress in this space coming up. And definitely the best of luck to you and Axi Select and Axi Brokerage.
Thank you, Nikolai. It was a pleasure to speak to you today. Always good to catch up, and happy to keep in touch and see where we are with our next discussion. See how the industry's changed since then. But thank you very much for your time. Appreciate it.
Absolutely. Thanks, Greg.
Thank you.
Thank you to our sponsor for this podcast, Axi Select, the first funded trader program with zero registration and monthly fees. If you think you have what it takes to trade your edge and potentially become a professional trader, you can join the Axi Select program by visiting www.axi.com/int/funded-trader-program.
The Axi Select program is only available to clients of AxiTrader Limited. CFDs carry a high risk of investment loss. In our dealings with you, we will act as a principal counterparty to all of your positions. This content is not available for Australia, New Zealand, European Union, and United Kingdom residents. For more information, refer to our terms of service. Standard trading fees apply. This content is provided solely for general informational purposes and should not be construed as financial product advice or an investment recommendation. It has been prepared without considering your personal circumstances.
Thanks for listening to our latest Finance Feeds podcast episode. For sponsorship opportunities or to become a guest, please email us at info@financefeeds.com.